Good morning, I'm Guy Johnson. I'm alongside Kriti Gupta. We're an hour away from the opening trade. So what do you need to know this Monday morning? Germany's ruling coalition is crushed in regional elections, raising questions as to how much longer it can last. The AfD has won the far right's first state election since the Second World War. The French President Emmanuel Macron will meet today with Bernard Cazeneuve as the two try and find common ground and end the country's search for a new prime minister. And Israel is braced for a nationwide strike as anger grows over the Netanyahu government's handling of the hostage crisis and a possible peace deal with Hamas. Kriti.
A lot to digest in the world of geopolitics and certainly election risk here in Europe. If you looked at the markets, you wouldn't have guessed that. You are seeing futures on Eurostock 50 marginally lower. I'm not even going to call it that. Flat. Outperforms in the FTSE 100. How much of that is coming contrary to the oil price move that we are seeing? We're going to dive into that story higher by 0.3%. Some weakness, however, in the European currencies. Green on screen now, but it is a pullback from what we saw on Friday. Euro dollar at 110.55. Cable 131.31. The countdown to the opening trade starts right now.
Monday, the 2nd of September, Labor Day in the United States. Markets there are largely closed, as a result of which we are going to see light volume this Monday here in Europe and into the afternoon, I suspect. But what do we have to talk about this Monday morning? Another political earthquake in Europe, this time, Kriti, out of Germany.
This time out of Germany. But not much is changing when we're talking about the end result. Yes, this is the most kind of far right, these two key former East communist kind of states have voted in terms of it since the Second World War. But from a net perspective, it weakens Olaf Scholz's position.
Yep.
It hurts the coalition. And Germany's kind of left from a budget perspective right where we started, which is in gridlock.
Does the coalition last? Are we going to see the FDP being kicked out? Are we going to see early elections? We have general elections next year, federal elections next year. Does that come earlier? If they were to see general elections next year, what kind of a government could be formed? I saw an interesting line suggesting that actually, were we to see a first-past-the-post system in Germany, you would see the SPD running basically West Germany and the AfD running East Germany. It's going to be really interesting to see how that election ultimately could work. But it's, again, another piece of the politics story that in Europe is basically signalling status. As you say, nothing can change. If Germany and France can't make progress, if Germany and France are politically hamstrung, what hope does Europe have of making progress on the key issues that dominate at the moment? Well,
you're talking about those key issues. Let's talk very briefly about what this kind of right-wing voting actually means in terms of the end result here. This idea here that we're talking about potentially removing sanctions in Russia. I mean, it's not something that's hitting the national level, but something that the party is advocating for. Of course, the heated immigration debate gets even worse.
Yep.
And I thought this was interesting. In my reading, Germany, of course, having the largest immigrant population in Europe, so we know that's a sticking point, but also in the world, in line with the U.S. and Saudi Arabia in terms of per capita, and that's manifesting in a really interesting way. It's a negative in Germany. It's a positive in the likes of Spain, for example, which is actually using that as a way to spur its economy forward.
The U.S. is seeing the similar sort of thing. You look at the economic data coming out of the U.S. being driven by immigration, but does that sit? Is that possible to continue given the politics that we are watching emerging? France, let's talk about that. We're dealing with the fallout from almost a similar situation that emerged there after the snap poll that was called by Emmanuel Macron. Cazeneuve is on the list today. So are we going to see common ground being formed between Macron and Cazeneuve? Can we see potentially him being named? There are other conversations that are happening today. Feels like a bit of a kind of smoke and mirror situation at the Elysee today. They're having all kinds of talks there between various parties, with various sort of senior political figures out of France. But is that conversation with Cazeneuve the kind of the key one? And how close are we to him being named as the next prime minister? And can he survive a vote of no confidence?
Yeah, it's fascinating because they're meeting with Cazeneuve, as you point out. He's also meeting with Francois Hollande. He's meeting with Nicolas Sarkozy as well. So he's kind of spreading the gambit. And these are also two characters from the past who come and are kind of both vowing for two different things. Nicolas Sarkozy, for example, of course, we expect this from him, saying that France is a right-wing country, should probably have a right-wing prime minister as well. No surprise coming from him. But it's interesting the kind of the net he's casting in terms of getting that kind of advice. How much of that is actually pushing the conversation forward, I wonder?
Is it window dressing, though? Is it basically camouflage for the Cazeneuve conversation? I am talking to everybody. But that's actually the bit of the conversation that really matters in terms of forming that next government. Let's talk about what is going to dominate this week. It is going to be the data. We've got payrolls coming out on Friday. You've got ADP this week, of course. You've got the claims numbers that are going to be coming up as well. We've got JOLTS data. The labour market absolutely front and centre once America gets back to work tomorrow.
Yes, they're enjoying the holiday that I think we were supposed to be enjoying last week. Look, it's a fascinating day for the data. The PCE number came in a little bit cooler than expected, so you actually kind of solidifying some of those rate cut expectations, as if we needed more solidification on the central bank stuff. But it is a big day for a lot of the jobs data. The payrolls number, of course, on Friday. You've got ADP before that, private payrolls, JOLTS, plenty going on. And then there's, of course, the macro as well outside of the states that we're keeping our eye on. Plenty of data coming out of China, for example. The PMIs over the weekend were not very strong. You've got wage negotiations and wage data coming out of Japan as well this week. Not to mention inflation numbers coming out of the euro area and, of course, Switzerland as well. So
yeah, we get more manufacturing PMIs out of Europe. And I want to draw a line between them and what is happening in China. The China data, we've kind of ignored it for a long time. This China slowdown has felt idiosyncratic. It's felt like something that we can watch from afar. People have largely withdrawn. There's an expectation that it's not going to have a wider effect on global markets. I wonder whether that is coming to an end, whether this data is now getting bad enough that we should really be paying much more attention to it once again. And the ripple effects, you're starting to see the data out of China having a chilling effect on the region.
Yeah.
You're starting to see that effect globally. We've already seen that, obviously, into Germany. If the China situation continues to deteriorate, how much worse does the German data, the European data get? And if we get stimulus at size, what impact does that have? We're thinking about the stimulus coming out of the States in terms of Fed cuts.
Yeah.
Actually, you wonder what effects China's stimulus would have in terms of the global economy as well.
No, it's a key point because back in, this is my favorite little fun fact of history here. In the GFC in 2009, a big part of that global recovery wasn't just the states kind of turning a corner. It was this massive infrastructure spend coming out of China, boosting the commodity picture and then having ripple effects around the world. I'm not so sure we're going to get that this time around in the face of some slowdown because the Chinese government has already tried to do that. They've tried to spur some of the downturn or stem it, at least, when it comes to especially the property sector, to no avail.
More of that this weekend, more companies signalling significant issues, and I think that problem hasn't been dealt with yet, so that is something that they need to deal with. How they deal with it, I agree, is absolutely critical here. Do they have the capacity to deal with it is a key question. But the urgency to deal with it is getting greater and greater.
Yeah, and it really shows up, to your point, in the trade numbers, I think less so than the market numbers. China used to set the tone for the market, and it kind of feels like investors in Europe and the U.S. are maybe paying attention to other things. Let's talk about what they are paying attention to. We kind of just hit it there a little bit. When it comes to some of the data that's coming out this week, of course, the markets are closed in the States, as Guy was mentioning today, but you do get plenty of data throughout the week. U.S. construction spending, the ISM manufacturing index, of course, Euro area PMIs, plus right here in the U.K. as well, not to mention that Swiss inflation data. And I emphasize that because there is an FX story there that we're going to be covering on Wednesday as well. Plus the Japanese wage data. Speaking of FX, speaking of that haven bid, how does that show up in the bets on the yen? Plus then, I think Friday, though, I think it's safe to say, is the big day when it comes to all the macro data. That payrolls report could be a game changer. Absolutely.
Are we set up for it to be strong? Because essentially the data, like Jemana was talking about this at the back end of the last show, the sequential numbers have been getting worse and worse and worse. Yeah. You do wonder whether the last set of numbers maybe were unusual in the fact that they were heavily weather-related. How does the market bounce back? How does the market deal with the bounce back in that data? Are we 100% comfortable with the idea that we get 25 out of the Fed?
Yeah.
I think we probably are. It's kind of what comes next after that, which may be laid out by this data.
And you look at kind of the micro of that. If you look at the surveys and go really nitty-gritty, Anna Wong, our chief U.S. economist, has been really great about that. You start to see some of the kind of worries about layoffs, about not replenishing people who quit the job, specifically in that tech sector.
It's interesting, the layoff data actually still looks really strong. So I'm going to watch what the JOLTS numbers have to tell us this week as well. What have we got to analyse? Who have we got? Who are we going to be talking to analyse all of this on the show today? In a few minutes' time, we're going to be speaking to Ella Hoja from Newton Investment Management, breaking us down all of the market action. 7:30, we're going to get historian Katja Hoyer's view on Olaf Scholz's coalition and what happens next. It was crushed in Germany's regional elections over the weekend. The AfD absolutely surging. 8 a.m., we're going to be joined around the table by Fiona Bull, Global Equities Head at S&P Dow Jones. Looking forward to that one a little bit later on, a big market focus. I appreciate the US is closed today, but we have got a massive week coming up for markets as we count you down to that payroll number. There are plenty of other things going on that we need to focus on as well. Let's walk you through the details of what we know this morning. Bloomberg understanding that China has warned Japan of severe economic retaliation if Tokyo further restricts the sales and servicing of chip-making equipment to Chinese firms. The Biden administration has been pressuring Japan to align with its campaign to cut off Beijing from advanced chip-making technology. Shares in Tokyo Electron and Lasertech have been falling on the news. Bill Ackman says the court order suspending X in Brazil will make the nation a, quote, uninvestable market. On Friday, X was blocked by Brazil's Supreme Court after being accused of failing to deal with political misinformation. That wasn't the only blow for Elon Musk, with Brazil's top court also threatening to block Starlink's bank accounts in the country. And the Israeli government is asking courts for a temporary injunction against the strike declared by the country's largest labor group. The potential walkout comes as pressure mounts on the Netanyahu government to accept a ceasefire deal. Hundreds of thousands protested over the weekend after the bodies of 6 hostages were found in Gaza. The Prime Minister has given no indication that he plans to change tack. That story suddenly, once again, the labour strike today, the protests we've seen over the weekend, the discovery of the hostages' bodies, seems to the pressure on the Netanyahu government seems to be once again really ratcheting up to a significant level. The peace deal that apparently has been brokered by the US is still on the table. He apparently hasn't taken that. There are questions about whether or not he's doing so for domestic political purposes. So the pressure is growing. What I'm thinking about is, were we to see a ceasefire, if I can speak, what are the implications of that? What happens in the Red Sea? Clearly, what happens in Israel and the more local region, but what happens to the wider region off the back of that? How does it change maybe the Iranian situation? There are lots of other moving parts around this story, and if you were to see a Gaza peace deal, you wonder how some of those change as well and what that means for the global economy. You
mentioned the key one, the Red Sea, which is, of course, affecting the shipping. The U.S. military has the U.S. Navy has pulled back on some of their presence there, but you are still seeing other coalitions that are very much operating there. I believe we're still monitoring an oil spill in that region that the EU is very concerned about as well. But you mentioned Iran. That's a sanction story. That's an oil supply story. Lebanon is one. We were talking about migrants earlier in the context of Germany and France as well. The other one we've got to keep an eye on is Lebanon and the kind of Palestinian population that goes to Jordan as well. Egypt is the key one, though, I think, in all of these negotiations, simply because part of that ceasefire proposal, or at least the sticking point of it, is what happens on that border between Gaza and Egypt and that Philadelphia corridor, and basically this idea of to what extent does the IDF still have a presence there, to what extent are checkpoints still there, specifically around concerns around things like arms smuggling, for example. So that's the absolute local situation on the ground and how it potentially would change. But you think about what is happening globally. You and I were sitting down talking geopolitics as we came and sat down in our chairs this morning. You got the situation in Ukraine, you got the situation in the Middle East and what is happening in Gaza. If you get resolution to one or other of those, is that a positive for markets at this point in time? Have markets moved on from thinking about those situations? Are they a significant factor in terms of how markets are priced at the moment? I don't know. Initially, yes, there was a big reaction to both of those stories. Is there still significant pricing around both of them? I don't know. I struggle to see it on a daily basis. It feels like the story has evolved from that. It absolutely has. The one place I would say is outside of it being kind of this risk appetite overhang is how it might show up in the U.S. elections and what that pricing looks like as we get closer to November. But that's going to be something that we dive into in the coming months. But coming up on the show is the landslide that Chancellor Scholz did not want, as populist parties on the extreme right and the left take more than 60% in regional votes. We're going to break down the details and the implications ahead. Plus, China's growth headwinds mount as factory and housing data worsen. We're going to dive into the details in our next hour. Up next, though, a focus on the states after U.S. PCE came in line. What's next for the markets? We're going to discuss with Ella Hoekse, head of fixed income at Newton Investment Management. If you have any questions for us or for our guests, get involved in the conversation. IB plus BBTV Go is the function on your terminal. This is Bloomberg.
We don't have a US economy that's falling off a cliff. It doesn't need aggressive rate cuts. So you're right. The worry would be that inflation comes back. So I think it'll be a wait and see after that 25 in September as to how much they do. And that may well disappoint the market for a while. Risk assets, bond markets, that's the volatility that I'm talking about.
Paul Skinner, Investment Director for Fixed Income at Wellington Management, talking to us Friday, sounding reasonably positive about how he sees the economic developments unfolding, particularly over in the United States. It's Monday morning. We're back to school. The holidays are over. Ella Hoja, Head of Fixed Income at Newton Investment Management, joining us around the table this time. Good morning.
Good morning.
So you're back from vacation. We're starting September. We're looking ahead to what traditionally is a very volatile month. What are you looking at?
Typically, Septembers tend to be bad in terms of performance for both equities and bonds, certainly have been for the last 4 Septembers. So quite a bit of price action to look at. I think broadly speaking, at least for fixed income markets, we have a lot of supply that we need to digest.
Yep.
We've had a decent rally, certainly since April. So we could give back some of that rally just to allow for this supply. And there's a lot of data. Data could be noisy. So I think you probably want to allow some space for yields to potentially move a little bit higher. But I think you shouldn't lose sight of the broader setup, which for us is supportive of rates, right? So we have inflation slowing, uncertainty around the cycle. So it is in favor of bonds, more broadly speaking. So
not equities. So bonds beat equities.
We would say so. I think in the setup with the uncertainty with elections, I think certainly the bets are in favor of rates. Credit markets, probably a bit more similar to equities, we would argue, right? So very little term premium left in the table in terms of owning risk there. And so we're being a little bit more cautious in credit markets here.
Okay, so that's a little bit more kind of by asset class. Let's go by region here, because I think there's been extra outperformance you've seen in gilt, for example. That's been reflected in the currency space as well. But I'm curious, when we now, to your point, go straighter towards the election, is that geopolitical risk or is that U.S. election risk? Is that a positive or a negative for U.S. bonds?
Yes, I think that's the big question mark, right? I think it will depend a lot on who wins this election. I think in terms of pricing additional yields for fixed income. So I think that is a risk. Net, I think the cyclical picture will dominate. So the data we get over the next 2 months will give us more of a direction of travel relative to the political picture. I think politics are a vector of volatility in my view. But I will concede that certainly the possibility of a Trump win is perhaps a bit less bond friendly over the short term, right? More medium term, it's the broad economy that will dominate the picture. In terms of regionally, I think UK, you have more sticky inflation in the UK relative to other economies. So probably gilts have done quite well so far. Maybe they need to take a bit of a breather. So relatively speaking, I think you still want to favor European bonds and actually even treasuries.
Well, speaking of that election risk, though, we talked about it in the States. We've got plenty of government risk right here in Europe. How does that show up in some of these spreads, for example?
You're seeing it in French spreads, right? So they've not come fully down to the levels they were prior to the election being announced. So that's telling you that investors are demanding plenty of risk premium. I think that's likely to stay there, right, especially given the outcome we had from this local German election. So that's perhaps the best way to reflect it. Perhaps additional premium in German bonds, which have always carried that sort of core bond price action to them. That's probably how you see it. And the euro, I guess, we've had a bit of a good run over the last couple of months. I think here it's very difficult for the euro to sustain those gains in the backdrop that either we have a soft landing, which is sort of what markets are pricing in the U.S., in which case the Fed doesn't need to deliver all the cuts that are priced in, and that should support the dollar. Or if we're engaged with this weaker cyclical backdrop, which is our expectation, then certainly the dollar is more supported. You have that famous dollar smile, right, which tends to bid the dollar. So I think, broadly speaking here, maybe a good location to get back into dollar longs, which sounds a bit controversial because I know there's a lot of people saying this is the death of the dollar and, the start of a multi-year weak cycle. I think that's too early to make that judgment.
If the Fed's on rails, i.e., we get 75, we get 100 bips between now and the end of the year.
Oh, they meant in September. I was like, what guy?
No. Okay, let's assume. Okay, sure. September's on rails. The rest of the year maybe is on rails. The Fed delivers a series of cuts.
Yeah.
What is the thing that changes the market dynamic? Therefore, is it the elections? Is it politics? Is it geopolitics? Where are we looking for in terms of the catalyst? Or is it just market positioning? Equity markets are very stretched. The data is going to come through and continue to weaken. Equity markets can't tolerate these kinds of high levels. I'm wondering what, as we think about the beginning of September, what is the catalyst that is going to start driving these markets if the Fed is on rails? Because we've obsessed with the central bank story for months now.
Well, the magic of markets, and Ella, correct me if I'm wrong here, the magic of markets, you're supposed to kind of figure out what's happening, not now, but in 6 to 9 months' time, right?
Yeah.
And I think, to Ella's point, that the U.S. election and what that actually looks like is still where we're piecing it together. What does a Trump 2.0 look like? Is it as inflationary as people are worried about?
Or Harris.
Or Harris.
Or is that just a continuation?
Status quo,
yeah. Thrown the kind of the China factor in all of this.
But if I may, Guy, because I think that's a very important question, I don't know that you need to predict the exact trigger to what's going to cause the correction. I think that's why valuations matter and positioning matters, right? So where we're at is basically a market that's pretty constructive on growth. Right? I think it's very difficult to meet people who are not.
Yep.
And so if that's already reflected in the price and people are positioned for that, you can take any trigger. Like, I think July is a good case in point. The volatility spike. We argued it was the carry trade unwind triggered by the Bank of Japan.
Yeah.
But ultimately, it was the positioning and the richness in valuations, right? And I think that play is still alive. And so, but perhaps it's your point that it's actually equity positioning and this bullishness in markets that doesn't need much of a trigger to correct.
What does a correction look like? But is it 10%? Is it like how stretched are valuations? If you think about the changing economic backdrop, if you talk about that growth narrative that everybody thinks that growth is coming, what is it that? How stretched is that misinterpretation? If you think bonds, if either bonds are right or equities are right at this point, and you seem to be telling me that you think the bond market is probably right at this stage.
Well, I'm a bond girl, right? So I always think bond markets are right, but typically history will tell you there is a lot of truth to that, right? And I think I'll probably be watching bond markets here. I know a lot of equity investors are. We're certainly getting asked more from our equity colleagues at the firm over the last month or so. So I would argue, but I'm definitely in the more bearish camp, right? So I will, I will concede. So I think correction is not a 10% setup, because if we get confirmation that this labor market data, which I believe, by the way, is weakening, and this is a trending issue, then we're going to have a much weaker backdrop over the next 6 to 12 months. And certainly you want to be in a defensive portfolio, I think, in that setup.
But Ella, we started off the segment by saying there's so much supply for this market to still kind of digest. How much of that is inflationary? And the reason I ask that is if we're not seeing that kind of digestion, basically, in the market, how does that show up in kind of the surface level yields that we might see in the next 3-4 months?
Yes, I mean, for this month, I will allow that there is some repricing in rates possible, and we're certainly looking to allow for that in terms of our allocation. But I don't think it's massive. We're talking 30 bips, 50 basis points at most, right? Over the next 3 months, I still think the macro picture will dominate, right? And you can ignore supply when there's a weakening backdrop and everybody has to sort of bid safety and bid bonds.
Spoken like a true bond girl.
Yeah, exactly.
Ella, we're going to leave it there. Nice to see you. Thanks for stopping by and joining us around the table. Ella Hoja, Head of Fixed Income at Newton Investment Management. So that's it. September is underway. It's usually a horribly bumpy month. And you do wonder whether the August kind of volatility event was a pre-shock. Do we get more? And what is a correction? I asked that question genuinely. 10% is the kind of classic definition.
Yeah.
But does a correction at this point look like more than that? If we obviously don't get to 10%, that's not a proper correction. But kind of what are we looking at? How stretched are we? And how bumpy could the data get? And you just throw in all the other stuff. There's so much stuff coming towards us. Politics out of Europe, what's happening in the Middle East, the US election. There's lots to think about.
So you're talking about a correction in the equity market. And I'm curious about the correction in the bond market, because that's the part that I don't get. Because it feels like the market kind of swings 20, even 25 basis points in one direction or the other. I'm talking about kind of 10-year yields here on one data, and then it kind of bounces back. And I'm curious if that volatility is a little bit more sustained. It's going to be something we dive into throughout the rest of the program. What does a correction look like across all the markets? We're going to go back to the politics, though, as Guy was mentioning. Coming up on the program, it's the first triumph for a far-right party in a German state ballot since World War II. We're joined by historian Katja Hoyer to dive into the details. That conversation next. This is Bloomberg.
OK, 30 minutes to the start of trading here in Europe. The US is out today. It is the Labor Day holiday in the United States. You are going to have one more day, I suspect, of light volume, and then we're going to get back, and September is going to be fully upon us. You do have kind of back to school here in Europe, and that's a factor as well. There's lots of politics that we need to factor into our thinking. Let's talk a little bit about some of that politics and how it is affecting Germany this morning. We'll talk about France a little bit later. But populist parties on the extreme right and left in Germany have surged in two regional elections held in the east of the country, this over the weekend. The results, of course, deal another bitter blow to the German Chancellor, Olaf Scholz, and the traffic light coalition that he is the head of. All three parties heavily punished in this election. Joining us now, Katja Hoyer, visiting research fellow at King's College London and author of Beyond the Wall, East Germany 49 to 90. Katja, great to talk with you this morning. Is this an East Germany story, or is this a Germany story we witnessed over the weekend? Was this about what is happening with the East being left behind, or is this about the wider issues such as immigration that are beguiling the whole of Germany at the moment?
Well, I think it's a story about all of Germany. I think the East is ahead of some of these trends because it's economically and politically more sensitive towards certain issues like populism, for example, but also to economic crises. And as we know, economic growth has been slow, and those sorts of things are always more acutely felt in the East because it's economically, in its economic structure, very different from West Germany for historical reasons. So, we can see now in the German media and in politics as well that this is worrying Berlin deeply, and so it should.
In terms of, therefore, what this means for the coalition, are we going to see policy shifts? Are we going to see a change? Are we going to see a reordering of the traffic lights? Are we going to see early elections, general elections, federal elections off the back of this?
Well, there's some pressure on the coalition in Berlin to call elections. I don't think they will, because unlike what's happened in France after the European elections, where there was also a surge of far-right populism, and Emmanuel Macron called an election, he didn't put himself up for election as president. If Olaf Scholz was to call an election, it would be about him, his cabinet, and the entire government, as well as parliament. So I don't think that's going to happen because at the moment he'd lose. And I think the coalition will try and cling on as long as possible. But what we have seen is a change of policy already. So after the horrific stabbings that we had in the city of Solingen last weekend, where there was an immediate call on the government basically to do something about illegal migration and safety on the streets, we've already seen a much harder tone from a left-leaning government on illegal migration, not just as a result of the stabbings, but also with a view to these elections and to the elections next year.
Well, talk to us a little bit about that, because, of course, it's already kind of lit up an already heated debate on immigration. And does it change anything in terms of kind of in the longer-term policy, not just from a political standpoint, but arguably from an economic one as well, especially as we're talking about the potential weight that some parties are arguing it has on the German budget?
Yeah, so I think we will see a change there, not least because the opposition, the conservative Christian Democrats, have also put a lot of pressure onto the coalition, basically, on immigration in particular. This is because there have been multiple incidents over the last few months. It wasn't just that one murder of 3 people in Solingen, but a few incidents that have really heated up the public debate around that. So now there's not just pressure through these elections in the East, but also from the conservative CDU party, which is currently leading in the polls and would probably come out as the strongest party. So basically, it's all-round pressure on Scholz and his government. And if they do want to shift public opinion over the next year or so, up until the federal elections happen, they will have to really do something, basically, to convince people that they regain control over this issue.
Well, Katja, we have more before the federal elections. We have more regional elections. I want to say September 22nd, I believe, is the date. Brandenburg, yes, thank you. The name escaped me. Does this have any implications for that region?
Yeah, it will do. It's also my home region, so I'm watching that very keenly, basically, because I'm from there originally. It's the area right around Berlin. So lots of sort of Berliners also live in it and then commute into Berlin. So it will have a market impact, I think. At the moment, it also looks as though the far-right AfD might win that. That region has been in SPD hands, so in the hands of Olaf Scholz's Social Democratic Party, basically since reunification, since 1990. And it's at the moment still got a very, very popular leader in an SPD man, basically. So it's currently SPD led, and he's very popular as a person. But that might not be enough, basically, to sway people. So we could see the AfD rise and win in another of the 5 eastern states.
Katja, if you think about Germany as a first-past-the-post system, the West is black, the East is blue. Is that how we should think about it now? And kind of in that situation, does the firewall that keeps the AfD out of government hold? How much longer can it hold? We are seeing, obviously, the pressure mounting and mounting and mounting, but I'm wondering when that break comes.
Well, I'm not sure that it's useful to think in these absolute terms because Germany doesn't have a first-past-the-post system. And if you look at who the second winners basically are, you'll see that much of the West is also blue. The problem with that way of thinking is, and this is what the German media, which are still largely kind of Western-dominated, have done over the last few months and years, really, is tell themselves that this is entirely an Eastern issue. Maybe Eastern people, because they lived under a socialist dictatorship for so long, just don't get democracy. It was a reassuring tale, basically, that the majority of Germans just surely wouldn't vote that way. And what we've seen in the European elections is that they still come out as the second most popular party in all of Germany as well, despite the East being a minority. And so basically you'd still end up with the same problems. What do you do with that? Do you try and form coalitions around them? If you do, they'll become more and more unstable over time. So the pressure is on at local level already. Do you work with the AfD or do you uphold the firewall? And if you uphold the firewall, say at the moment in Thuringia, which is the state where the AfD won, then you end up excluding the largest party, the party that won the election, which many people will feel is undemocratic. And as a result of that, you may get even more people voting for that party in the future. So it's certainly not a solution in the long run. If anything, it buys the centrist parties time to change their course and try and address some of the concerns that people have that lead to these results in the first place.
Katja, we've been talking a lot about the AfD, but coming in third in both regions has been the BSW. And I'm curious about the policy implications there as well, because to your point, it isn't just an AfD phenomenon. It is a broader one. But the commonalities between the AfD and the BSW is a more kind of Russia-friendly policy approach. And I'm curious how viable that is in this environment.
Yeah, so you're right that this is a new party, and it sort of combines left-wing policies on social policies, so basically labor markets and so on, with right-wing policies on immigration and vis-a-vis its sort of relationship with Russia, even though that isn't in the hands of the individual German states, but it's a federal policy. And in that, there's indeed some overlap with the AfD. In terms of how viable this is, because it isn't in state hands, it's quite easy basically for the AfD and the BSW, so the left and the right, to say, well, we're going to make sure that there will be peace with Russia because the economic consequences of the sanctions were very, very acutely felt in the East. There are other reasons, historical reasons as well, where there's a more kind of Russia-wary and Russia-friendly, I would say, at the same time, attitude in the East. People are more frightened of Russia, but also have a more positive view of the Russian people as such in the East and in the West. But the economic consequences are also real, but it's very, very easy for the AfD and the BSW to say, we'll change that because they can't do anything about it. They will never be held to account for these policies, all the while that they're not in the federal government. So basically at the moment they can say from Thuringia and Saxony, where these elections happened, we will make sure that we keep our rhetoric up, but actually in terms of policy, they don't have to deliver.
All right. Katja Hoyer, visiting research fellow at King's College London and author author of the book Beyond the Wall, East Germany, 1949 to 1990. We thank you so much for that crucial context that we're seeing, whether or not kind of the East is representative of broader Germany. And she would argue that it kind of is in terms of being the canary in the coal mine. To me, I think it was so striking because we're kind of trying to figure out how the politics shows up in the markets. And we just had this conversation with Ella, and that it could add some premium into the Bund market as well. There's a natural gas story here as well, in that the AfD and the BSW are both advocating for resuming some of those flows coming from Russia to Germany, whether or not that's viable on a federal level, to the point that Kriti just made. But I thought it was interesting that it's kind of showing up in the conversation.
Well, that was what the German economic story was built on.
Right.
So if you bring that back, do you return the economy to its former health? I don't know. The European story around that would obviously be problematic in terms of making that happen.
Yeah.
The EU has a more sort of draconian policy in cutting sort of the whole of the continent off from Russian gas. That still hasn't happened, by the way.
Yeah.
What we're not going to see this morning, though, is, I think, probably the reaction we saw in French assets.
Yeah.
After the snap election there and the big win for the far right in France. Because obviously that had a much more immediate government effect, i.e. we ended up with a caretaker government. That doesn't. The coalition is still hanging on here, but it just kind of raises the pressure. So I don't think you get the same effects on the DAX as you saw on the CAC that morning.
Yeah.
But maybe this is just a warning that maybe that is coming down the road towards you.
It could, but I think this is where the budget conversation is really handy here, because wasn't that tied, that far right kind of rise in France, tied to spending concerns that the markets actually had around the deficit? This is where Germany's track record about this kind of budget break, or this debt break, is coming in handy here, because regardless of who comes into the coalition, whether or not Olaf Scholz stays in power in a year's time, et cetera, that's where you start to see this kind of reassurance that no matter what happens, Germany's budget will still be intact. And maybe that's where the calm is coming from.
Will the German budget still be intact? It's the FDP that still seems to be pushing to make sure that the black zero is in place, that is retained. If you were to see other governments, other forms of coalition coming into place, would Germany spend more? How would that affect the dynamics within the bond market? How would that affect Germany from a corporate point of view? If you would see an investment sort of boom taking place in Germany, what would that affect? How would that affect the rest of Europe? I don't know. So there are significant implications here. Maybe we're just not there yet in terms of understanding what they are.
Well, I think you make a good point in terms of how it sits with broader Europe, in that I think going into, I don't want to say next week, but going into the end of September, there is a competitiveness report coming from Mario Draghi, where, and I'm getting really into the weeds here, but one of the expected items for him to hit is how much of the EU funds goes into the defense story. And we saw, in terms of a market perspective, when there were concerns about pulling aid from Ukraine, that showed up in the German corporates, right? Like your defense companies.
Think about it. America has benefited hugely. And there are arguments around, obviously, the level of government spending, federal spending in the United States. But America is benefiting hugely. You can see in the economic data from the spending that is coming out of the federal government right now. Massive, massive impact, lifting the data, keeping the data on a much more elevated basis. If you were to see something similar happen in Europe, what would the effect be? Now, I doubt that would ever happen, but it's interesting to see the compare and contrast. And it also affects the supply side of the economy in a really big way. So there's a kind of longer-term productivity story that needs to be thought of as well. The UK is having the same debate as well.
Oh, I knew I'd get the real Guy Johnson out of there the minute I mentioned defense. We're going to continue that as we talk a little bit more about another guy's favorite topics, which, of course, aviation. Coming up on the program, the Lufthansa CEO heading to Portugal as he reportedly weighs plans to invest in TAP. We dig deeper into the potential deal in today's Stocks to Watch. That conversation coming up next. This is Bloomberg. We're about 12, 13 minutes, if I can do my math right, away from the opening trades across Europe. We are seeing futures slightly mixed, not a ton to write at home about. I'm going to try to get my words right here. Underperformance in the Eurostoxx 50 futures down about 0.2%. Outperformance in the FTSE 100 is where we're seeing. Let's just get a little bit more context here on the macro story ahead of those opening trades. Rachel Evans, Bloomberg's managing editor for FX and Rates, joins us this morning. All right, Rachel, we got to talk about what feels like the main event, which is going to be Friday, the payrolls data. We have plenty of data in between around the world, but it's still feels like all eyes are on Friday.
Yeah, and I think it's very clear to understand why. We saw the jobs figures back at the beginning of August prompting that massive sell-off. We've obviously come a fair distance from there. The markets have stabilised. Everyone was listening to Jerome Powell talking about kind of being almost time to adjust rates. So this jobs print is going to be crucial from that perspective. But the thing that I'm really watching for in the markets around that is going to be the dollar. We've talked before on this programme about kind of how sort of the bond market has already had a big rally. Stocks are kind of near record highs. Like they're kind of predicting a soft landing. Everyone's maybe got a little bit ahead of their skis on that front. But on the dollar side, we've started to see declines. We're about 3% down from our peak back in late June, early July. And we've just seen traders flip from being long dollar, expecting more gains, to being short. We've now got about $10 billion worth of positions, positioning for a weaker dollar. That, to me, is significant because it shows you that everybody is finally gearing up for these rate cuts to actually happen, as opposed to just talking about happening. And I think, when we kind of look towards the jobs print, it's going to be very interesting to see whether that kind of confirms that trend and we see the dollar move further, because it's really one of the few markets that has a lot more room potentially to run.
Well, I think the CFTC data was fascinating at the weekend in terms of what it told us about how kind of positioning is moving. And it does finally seem like it's moving, as you say. But the euro is... There's a move in sterling, there's a move in the euro, much more positive positioning taking place there, despite the fact that actually when it comes to the euro, the politics doesn't look very good right now. Is the market just going to ignore what is happening in France, Germany, and the politics and how concerning that could be? Because when we got that French vote, we did see a more negative reaction, but we're not seeing that now. So it feels like the dollar story is much more dominant.
I think that's right. And I think, you do tend to see monetary policy trumping politics in most situations. I think where the Germany results are very interesting is obviously these are regional elections, but we do have kind of a broader federal election next year. So this gives you a sort of taster of some of the issues and some of the parties that we're going to get much more familiar with as we head into that. And as you point out, we did see kind of with those French elections, a real sense of risk in the market and a broadening of spreads. The interesting bit to me there is that, with France, we were looking at the spread of French bonds to German debt. Now, if we're looking at German bonds and potentially the risk there increasing and yields rising as we head into that election next year, what are we going to look at that in comparison to?
Treasuries.
It'll be treasuries, exactly. But when you have like Europe's basic risk-free assets starting to kind of look somewhat risky, that becomes an issue in terms of how you price the rest of the debt in the region. So one to watch.
Does that show up relative to UK gilts, though, as kind of being maybe not the long-term kind of risk-free safety place, but the short-term safe haven almost very quickly?
I'm sure the UK government would love that. That's certainly been a message that they've been trying to kind of like push forward, that they are kind of a market of stability. But yeah, I mean, obviously there's a lot of room down the road there. We've got a budget coming up in October, so we'll see how that goes for the UK.
Rachel Evans, thank you very much indeed. Bloomberg Managing Editor for FX and Rates. The capital gains tax story. We'll talk about that a little bit later on here in the UK and the impact that can have on private equity. So let's turn to the single stock story today. Which ones are we watching? Which ones are we not? Ollie Crook has the list. Back in Berlin. Ollie, over to you.
That's right, Guy. Let's kick it off here in Germany, where Lufthansa, we have the CEO, Carsten Spohr, we understand, making a little trip to Portugal to have some meetings with some government officials because he apparently wants to take a 20% stake in TAP, the Portuguese national carrier. This is a sort of carrier that's been plagued for a very long time, looking for a future. And it's also not the only one that they're interested in, right, Guy? We've talked a lot about the ITA bid that the EU Commission had some issues with, but has finally passed. But as you can see right now, it's been a tough year for Lufthansa. It's been a tough year for aviation. So an interesting moment, maybe a good one, maybe a challenging one, to step in and try to make some acquisitions. Then we'll look at Bayer, also here in Germany. They've got a drug out that is a kidney drug that actually has some good effects and complications from heart failure from a study that they just put out. Analysts say that this drug could be worth about 2.2 billion euros worth of sales in about 10 years' time. And for Bayer, obviously keeping that pipeline fresh, they've got a couple key drugs that are about to roll off the patent, so they need to do that. And obviously a stock that has been, through the last 5 years, just absolutely decimated and ping-ponged by that ongoing Monsanto litigation for Roundup. And we can close it out with the UK property market. I know where you guys always like to end things with a possible bid from Rupert Murdoch trying to get into the action on Rightmove, bidding potentially up to $5 billion for this. The REA Group over in Australia, that side of this trade, down 6% this morning, because basically what they're talking about is paying maybe up to $5.8 billion for this business. That's about a third of their market cap. So all this to watch at the open.
All right. Oliver Crook with our stocks to watch. We thank you so much for joining us. We're back in Berlin, joining us this morning. Again, another stock that we're got to keep our eye on is Atos. They're cutting their outlook. potentially seeing some market moves at the start of the opening trade.
More Atos volatility.
Yeah.
We thought we'd put that maybe to bed, maybe not. It'll be interesting to see whether or not that comes back to the fore. It's going to be a light volume session. The US is going to be out. Feels like the last.
Should we leave?
We can go. We can go and have a nice breakfast. It feels like the last light session, though. I think we are kind of back to school in Europe today. I think we're probably back to school for markets tomorrow.
Yeah.
I think we'll kind of get into the September story then, I think. It's going to be really interesting to see kind of what the positioning story and how it shakes out. People are back at their desks. Are we going to see a significant shift? September's normally super volatile. And we've got a really busy week coming up. And you've already started to see some of that in the CFTC data out Friday. Yeah. Does it continue into today? And what kind of September are we going to have? There seems to be a lot at play at the moment. Market positioning, politics, what's happening in the geopolitical story. There's a lot to fold in.
Yeah, there is a lot to fold in. I think, to your point, it's usually when you look at kind of the seasonality data, August and September are almost a coin toss of which one is actually worse. Yeah. I wonder if, to your point, we get them to be 2 consecutive bad months when it comes to that volatility. But it also feels like August was more of a stock story, right? It was that correction story. It was the unwind of the carry trade, et cetera. I would argue September is more of a bond story, partially because of a cut from the Federal Reserve, but also because of all of these politics that you're seeing in Europe. The very point that Ella made, that Rachel made, even that Katja made, that could have ripple effects into the way German debt is priced.
Yeah, the German story feels like it's maybe a next year story, so maybe we watch that one a little further down the road. But yeah, I don't know what the catalyst is, which is always the fun part of this job, is trying to figure out what it ultimately could be. It could just be as simple as positioning. Yeah. The market took that volatility at the beginning of August and then went very long equities again. So the market we're kind of back to where we were, not quite, but back to where we were, and vols come down really sharply. Yeah. Is that the right way to go into September?
It's an entire reversal because it's come at the expense of that dollar long positioning, and that's where it feels like from an asset class perspective, the rotation has come in. That conversation isn't over. We're going to be diving into the next hour, but coming up, it is the opening trade. Futures a little bit mixed here. FTSE 100 outperforming. Stick with us. This is Bloomberg.
Monday, the 2nd of September, back to school here in Europe for many. In the States, it's the Labor Day holiday, which means volume is going to be light today. We actually traded strongly into the close Friday in the United States. Bit of volatility in the last few minutes, but generally the picture is that Europe needs to price that little rally in maybe at the get-go of trade here this morning. But as I say, it's a light volume start to the week with the United States out. So let's take a look at how futures are trading. Remember, no bond trading in the States today. We do get US equity futures, so we'll keep an eye on what is happening there. Euro futures not really giving us a sense of direction. FTSE's up by 0.2%. They're iron ore rolling over a little bit. Just keep an eye on that in terms of the miners today, off the back of the China data that we've seen. So that may be a factor in terms of the get-go of trade here in London. Nasdaq futures a little bit softer, but I think we'll wait, for the latter part of this week before we get a clear gauge as to what is happening stateside. The data starts to pick up kind of midweek. We get payrolls, jolts, we get claims this week, we've got ADP this week. Big tell on what is happening with the US labour market. So a slow start, but a strong finish, I think, is the way that this week looks like it's going to be shaking out, Kriti.
Plenty of macro data to watch this week, but also a couple of earnings stories. We've got Broadcom reporting this week, HPE. We're going to talk about that consumer story, that business story, and the demand a little bit from AI from maybe not your big tech names, but some of your others as well. There's a couple of corporates we've got our eye on here in Europe as well. Lufthansa is going to be one of them. The CEO heading to Portugal for talks on that TAP deal. Bayer is another. It looks like their kidney drug is treating a common form of heart failure in a particular study. Then, of course, as Ollie was pointing out in the last block or so, we do have our eye on the housing story. REA making a potential bid for Rightmove, Guy, plus Atos, which is my new obsession this morning.
I think Leverkusen went down to Leipzig this weekend, so not a great weekend for Bayer on that front. OK, here we go. The opening trade is upon us. Monday morning, we are open. Here we go. Let's take a look at the numbers and give you an idea of what is happening here. Slow start, I suspect, as I say, to the week. The FTSE 100 flashing in and out of positive and negative territory. Can't really make up its mind which way it wants to go today. No obvious clear catalyst maybe to decide ultimately which direction we are are going to be going in. The 600's a little light, but not by much. The IBEX is a little light, but not by much. There's a familiar theme developing here. At an index level, it doesn't look like we're going to see much in terms of the price action. There you go, the CAC filling in the gap as well. Maybe a little bit more downside coming for the SMI. We'll see what happens there. But basically not much happening, really little happening in terms of these numbers. Kriti, below the surface, I'm assuming more things are happening. Tell us what we're watching there.
Yeah, we do. We have some excitement. I'll go ahead and rescue it here. A lot of it's actually coming in the healthcare sector, which I thought was really, really interesting. One of your biggest index contributors to the upside is actually Sanofi, and we're still waiting for some of those trades to shake out here when we get those numbers on the French index. But your downside is Novo Nordisk. Some of your heavyweights, your core six that you love to look at, ASML, Novo Nordisk, even LVMH, are actually weighing the index down. But again, not by a massive margin. Biotech, a couple of names in biotech, plus a couple of names in the commodity sector seems to be the upside help that you're actually getting. When we look at the French index, though, and again, we are still waiting for the full French, more of kind of the pricing to actually shake out. It is broadly negative. Luxury, of course, taking a beating. It kind of feels like to me this may just be a little bit of a game of heavyweights here.
The basic resources sector is the lead losing sector this morning. I think that probably is the iron ore story. That's how the China story is going to ripple through.
Rio
First thing this
Tinto
morning.
taking
Rio,
it, yeah.
Glencore, under a little bit of pressure this morning. But it's interesting that luxury is seeing that weakness as well. Is that again the China story?
I was about to say, yeah.
That would seem maybe logical that's where we're seeing. So that's where we're seeing the weakness this morning. Basic resources, consumer products, bit of weakness in the retail space. Not much upside. Retail maybe seeing something around maybe that bit we're seeing into the right move story here in the UK. So that's what we're watching this morning. As I say, it is a slow start to what I think ultimately will end up being a fairly busy week. September is traditionally a very bumpy month as well. So how are we thinking about the kind of volatility that we are anticipating? Let's get another take on what we're seeing here. Fiona Ball, global head of equities at S&P Dow Jones Indices, joins us now. You're anticipating a bumpy ride in September? The beginning of August was fairly volatile. We then calmed down. The risk kind of bid came back into equities. What do you think the setup looks like going into September?
Well, we had a pretty strong end to the month for the S&P 500 after that 6% fall in the first 3 days of August. We still ended the month up 2% and change. So we know historically that September can be a very volatile month. We saw, again, with that move in the 500 at the start of last month, a big uptick in the VIX. They've fallen back to around 15. Let's see what happens. There's a lot going on. We're moving seriously into the US election cycle. We've got issues, as you've been speaking about, in China. And even here in the UK, we've got a budget coming up. So there's lots going on.
So there's lots of catalysts out there. Are we going to continue to focus on the sort of central bank story, which we feel like we've been doing for a while? Are we going to see a hard landing, soft landing? What kind of a slowdown are we seeing? What kind of reaction are we going to be getting? Or does politics start taking over? Do other factors start taking over as maybe the catalyst that markets are going to be reacting to?
I feel like the market is pretty well versed in what it thinks is going to happen in terms of major moves in interest rates. We'll need to wait for the FOMC in the middle of the month, but that seems relatively locked in, that there'll be some type of cut. And so I think as we move further through autumn that we will see that mix maybe move more to thinking about the markets, thinking about political issues.
When it comes to, so we're talking about political issues as well, but we talk so much about the fiscal of it all. We talk about these massive risks and that are going to be affecting the bond market, whether a Trump 2.0 is inflationary, et cetera, et cetera. What is the read-through into the equity market? Does the equity market maybe not care? How are you viewing that?
Well, we saw the first 6 months of this year, we saw, the story that we're well versed in, which is, the Mag 7. We saw growth, we saw IT, we saw consumer discretionary do very well. In the first couple of months of the second half, we have seen somewhat of a rotation. I would say it's a weak rotation, but we have seen, the potential impact of lower interest rates. So moving, if we look at, S&P sectors, real estate, back into value. Yeah. And so I do think that, we'll be looking out to see whether that rotation continues.
But does it show up in things like, this is where I'm going to kind of marry perhaps the political with some of the other sectors that we're seeing. The chip sector, chip stocks, defense stocks. It feels like those are the parts, even I'm going to throw biotech in there as well, specifically in the States, that are perhaps a little bit more receptive or a little bit more sensitive to a Trump trade or a Kamala trade, whatever you may call it. And I'm curious if you're starting to see elements of that, because one of the arguments we've heard around this table is that we still don't know what the policy agenda is of both candidates, and therefore it doesn't show up in the markets. Do you disagree?
Historically, we do see that sector effect in a lot of the Novembers when there is a US election. The dispersion, the monthly dispersion of the S&P 500 is more and more explained by sectors as you move through that election cycle. We've maybe not seen that so far, and maybe that is because we don't have a clear indication of policies from both of the candidates.
Let's just talk about Europe versus the United States. So over the last few days, we've had record highs, Stock 600, DAX. So European equities appear to be doing relatively well. I've also got a weak dollar, which is telling me that maybe actually people are favouring assets outside of the United States versus inside the United States. But then I compare equity performances in Europe and the United States during the month of August, and the US outperformed. Has the moment of Europe doing well and the catch-up trade happening past us? Is it still yet to come? What do you think about that relative positioning?
We certainly did see that catch-up of Europe. It's still lagging in terms of, versus the US. I do wonder whether we have seen investors that were looking at alternatives to US large cap had maybe gone into Europe but are now looking at what they might view as less valued US sectors. So going into those defensive US sectors.
And small caps and all the other things. So
and even going into equal weight.
Yeah, into the equal weight S&P. So do you think the moment is... there's maybe reasons to be cautious on Europe. We think about what is happening with the political story right now. Do you think that's going to be something that, again, that's going to be a catalyst? American investors are going to look, I don't want to deal with that. France is a bit turbulent right now. Germany's a bit turbulent right now. We still don't know what's going to happen with Ukraine. Are there reasons to stay away from Europe?
I think there are reasons to look at alternatives to Europe if you are not interested in just being in the S&P 500.
So if you're looking for an alternative, alternatives, Europe is not the one, basically.
It might not be because of all of the things that you said. Germany, the political situation, the its dependence for some of its major sectors on China, as you said, France, and the ongoing issue and war in Ukraine.
What about the UK as kind of this maybe, I say this with a ton of caution, I'm definitely jinxing it this morning, but a haven of sorts, especially if we are talking about that US outperformance, so much of the FTSE 100 kind of underlying revenue comes from the States and comes from that consumer revenue. I'm curious if that is the alternative that perhaps Guy is seeking.
The UK has performed pretty well, and we've seen that come really out of the healthcare sector and out of financials. It is a more diversified market than, say, the US. We've got a couple of catalysts coming up in the UK. We're about to go into conference season for the UK political parties, and then obviously we have an autumn budget. And I think that will play a really important role in how the market performs coming into the end of the year.
I'm out of questions.
Are you? Okay.
I think so.
I'm not. So in terms of how we factored all of this in, so you've got the politics story. The one thing I'm still trying to understand is how the US election is going to affect all of this, because if we're looking at US assets and thinking about how we're going to see politics impacting that story, the US election looks like it's actually got some potential for change. You've got a potential tariff story coming if we get Trump. You've got a more subsidy driven story coming if we get Harris. I'm simplifying things. How big a catalyst is that election going to be? When do I start preparing for it? Do I start preparing for it this month? Do I wait until maybe the polls are a little bit clearer as we get closer to it? How do you think the market setup is going to work into that election?
Yeah, so if you're a market participant and you're looking at playing the election based on sectors, our historical research would say that you don't necessarily see that dispersion in sector returns until quite close to the election and afterwards. We look at 2016, we saw in November of 2016 dispersion based on sectors was about 40% of total dispersion in the market that month, compared to in non-election months it's about 20%. So, but we usually don't, or historically have not seen that until quite close to and after the election. And obviously, it depends on what policies we see from both parties.
Absolutely. If we get a 50 basis point cut between now and the end of the year from the Fed, is that good news for equities or bad news for equities?
Well, historically, it's been relatively good news for equities, but we have to balance that, as we've been talking about on some of these other issues. Is a 50% cut plus a US election going to be good news? I don't think we know that yet.
But is it, so the market, the equity market seems to be basically at the levels they are at the moment because they anticipate a soft landing. Is that soft landing commensurate with 25 basis point cuts? And if we get a 50, does it indicate that there's more to worry about? This is the bit that I can't figure out as to whether or not a 50 would signal that we need to be. I'm looking for the catalyst. Is a 50 basis point cut a catalyst for equity markets and risk off?
I think a 50% is not what the market currently expects.
Yeah.
So I think from that perspective, when we see those type of outsized moves in interest rates, we do see the market move. Which way it's going to move, I don't think I have a strong view on.
All right. Fiona, we'll leave it there. Global head of equities at S&P Dow Jones Indices. We thank you so much. This is a really fascinating conversation as well because she's kind of hitting on the points that you've been hitting on, which is the CFTC data and the positioning story there as well. But I'm still waiting for that currency read through. What does that dollar conversation look like?
What is the dollar move telling us? Is it telling us that everybody's looking at risk assets outside of the United States? Because in theory, the flow story should move us in that direction. But I wonder whether that really is the message that we're getting here. Because I look at what's happening with equity markets, with risk assets more broadly. That story still seems to be relatively intact. So I'm not seeing that kind of dollar weakness telling me something about where flows are going and how maybe they're reversing out of the United States and into other asset classes. But ultimately, will it be? I just haven't seen the data yet.
Yeah, well, and we may not see it for some time, but I think this was such a, going in, and from just what I remember from 2020, it was such a, because you had such a strong, again, dollar positioning going into the U.S. election, naturally, which I imagine we'll see, again, in either direction, there was either an incentive or a disincentive from the international community to dive into the S&P 500 and to get into or find an entry point into specifically those Mag 7 stocks that it feels like maybe the international audience isn't as exposed to the way a domestic audience may be via mutual funds or ETFs or whatever.
Let's go to the Mag 6 here in Europe. It was the Core 6, as we call it.
Sensational 6.
Here in Europe. We can call it the Sensational 6 if you want. Maybe let's see how sensational it is this morning. Not so much, as you can see. Weakness really across the board. You have some of the luxury names under. Actually, that's a fairly decent amount of pressure. LVMH is down 1.5% this morning. Is that the China trade? We're certainly seeing it in some of the basic resources stories as well. This China story, I think, is going to be one to really pay attention to. Are we starting again to worry about the spillover effects out of China into other asset classes? If the Chinese data really turns and takes a turn for the negative, like it's been bad for a while, but if it really starts to kind of accelerate to the downside, have we fully priced that in to names like LVMH?
Well, those are the heavyweights. There's a couple of other individual stocks on the move. Oliver Crook watching that story for us. Ollie, walk us through it.
Yeah, Kriti, the first one we've got to start with today is Rightmove. I mean, look at this, up almost 25% this morning after allegedly, this is again still said to, this is buying the rumor that REA, the Murdoch-owned Australian company, will bid for this company. The arithmetic behind this deal gets really interesting. REA in Australia closed down 6%, but this brings Rightmove to a market cap of $7.1 billion. The market cap of REA is only $18 billion, so this would be a substantial acquisition for them, but as you can see, catching a bid this morning in London trading. Now you look at Bayer. They've got a new drug out that is called Thuringia, which is the first drug that I've, I think, been able to pronounce, up a little bit. It's a kidney drug that helps with heart failure, apparently. Analysts say this could generate up to $2.2 billion worth of revenue in the next, by 10 years from now. And of course, Bayer has also been ping-ponged around hugely by that Monsanto acquisition and the Roundup litigation. So really looking for new drugs in their pipeline. And then we'll close it out with Lufthansa. We had the CEO, Carsten Spohr, allegedly going to Portugal right now, having meetings with the government there because he wants to acquire 20% of the carrier out there, TAP, that has been embattled for a long time. Losing a little bit today on what is a down day for the market, but something to watch closely, particularly as they try to also acquire a carrier in Italy. All right.
Oliver Crook, we thank you so much for walking us through some of those stocks to watch. A lot of German corporates this morning moving.
Everybody wants to, it's going to be interesting to see ultimately who gets the TAP out of Portugal. You don't want it for the Portuguese business, you want it for the Latin America business. That's the trade there.
The Latin American business.
Yeah, you think about Brazil, etc. So that's the trade. They've got strong connections down to Latin America. And as we watch and talk about that, let's go hop across the border and talk about the Spanish data. I'm using a Kriti Gupta phrase there. I'll try not to do it again. Weakness in the Spanish manufacturing numbers. You keep talking about the strength of that economy. I think probably on the services side, yes, but Spanish manufacturing PMI, 50.5, still positive, but down from the 51 and certainly missing the 51.6 that we were anticipating.
Yeah, and I think this is a really important point to make here. I'm just going to nerd out. Forgive me, as I always do, on Spain. But this is a story. Spain's outperformance is a story that isn't just a right now story. It is one that is 10, almost 12 years in the making, post their housing crisis, of course, post GFC as well. And I think this is significant why the manufacturing data may not have as much of a read through as maybe it did, say, even 5 years ago, because this is an economy that is re-pivoting to more services. They're taking kind of the French playbook there, and they're doing it in their IT services, their business services, and trying to really cater to those foreign markets. It's been working so far. It may not work forever. There's a sustainability issue, certainly in Spain.
It's also a tourism market.
It is a tourism market.
That's huge. And that has been really strong this summer across Europe.
I mean, I'm responsible for like half of that, but we'll see how sustainable that is. For me, it's sustainable at least. But coming up on the program, we're going to talk about growth in a different part of the world and put our focus back on China. Their engines, growth engines, spluttering there as well as weak factory and housing data piles pressure on that government. We're going to dive into the details and the ripple effects, which we're already seeing in this market. Next, stick with us. This is Bloomberg.
Approaching 20 past the hour. Welcome back this Monday morning. This is what equity markets look like across Europe. A little bit of softening, maybe some China effect into that story. You're seeing it in the basic resources sector. You're also seeing it in some of the luxury names as well. We'll come back to that China story in just a moment. I want to start, though, a little roundup of what's happening with Lufthansa. The CEO, Carsten Spohr, planning to meet Portuguese officials today to discuss a potential investment in the state-owned airline TAP. Remember, others are interested in this business as well. IAG, Air France also taking a look at this. Bernard Cazeneuve is back. He leads our global aviation coverage and joins us now out of Berlin. I thought he was meant to get ITA, which he's now got. What business has he got looking at TAP? I thought that was going to go to Air France or maybe IAG. Is this a surprise that maybe Lufthansa has the potential to take a stake here?
It's a bit of a surprise. Good morning, Guy. And you might think, is Carsten Spohr being greedy here? You know, he just got ITA over the line, and that was quite a battle to get into shape. You know, a lot of political back and forth, but that's now sort of home and dry, and he's now swiftly moving on to the next asset. What we're hearing, and this is unconfirmed by the Portuguese side and the company, but what we're hearing is that he's going there just to sort of get a sense of the lay of the land. You know, in what kind of shape might this deal take? Would it be done similar to ITA in sort of installments that you buy one stake first and then buy more later? TAP is an altogether more sort of robust asset than ITA, and as you said earlier, it promises the Brazilian market in particular and the broader Latin American market. But also, as you say, this is an asset that's attracted quite a bit of interest. Publicly, both IAG and Air France have said that they'd like this as well. So this won't be easy for Carsten Spohr either way.
All right. Bloomberg's Benny Campbell watching that for us. And as we speak, by the way, Lufthansa shares down about 1.5%. We're going to see how that conversation shakes out. We thank you so much for that context. So let's go to one of our other top stories that we're monitoring this morning, and that is coming out of China. Factory activity contracting there for a fourth straight month, with house sales figures showing a worsening residential slump. Economists saying the data has highlighted the urgency of government intervention to keep an increasingly unlikely growth target in sight. Let's get a little bit more context on this. Bloomberg's China executive editor John Liu joins us this morning. John, a pleasure to have you on the program. Look, we keep hearing this out of China. There's weakness in the property sector. There is arguably weakness in the stock market sector as a result. Walk us through just how bad or how poorly China's economy is doing, especially given we've had weeks of some kind of growth downgrades from various banks.
Well, so we have this 5% growth target, GDP for the year, and that looks more and more sort of out of reach When you get data like this, you mentioned the contraction in PMI again. It's the fourth month in a row. But if you look back over the last 12 months, there's only been 3 months where China PMI has actually been in the positive territory. And so this has been a long, ongoing slowdown. And what happens when we get data like this is people worry that what the government has done to stimulate the economy is not working. And so lots of cities have made it easier for developers to lower prices. That was supposed to get people buying homes again. That has not worked. We've got data showing that sales in August fell by almost 27% from a year earlier, faster than they fell in July. Governments have been providing subsidies to get people to replace their old cars, replace their appliances, companies to get new equipment, and that has not, at least for now, shown in the PMI data.
So, John, should we be expecting some sort of a shock and awe economic outcome here? Is China capable of delivering significantly more stimulus on top of what you've already outlined? Because we're starting to see already the signs that this economic slowdown is having a chilling effect on the whole of Asia. So I'm just kind of wondering, how far away are we from a point where China steps in a much more meaningful way?
I think we are still substantially far away from some sort of big boom stimulus. If you listen to Xi Jinping, if you listen to the central bank governor, you listen to all of Xi's lieutenants, they are really worried about debt. They are really worried that some big round of stimulus is going to create another mountain of debt like China created in the aftermath of the 2008 financial crisis. And they're holding off. In the first half, we actually have seen government spending trail the pace that we had last year. And so there's a lot of care being taken in terms of how much is borrowed and care being taken in terms of what that money is spent on.
John, we're going to watch very carefully. You're already seeing that chilling effect in Germany. You're already starting to see it in the manufacturing sector more broadly across Europe. You're seeing it in some of the regional data across Asia. This is going to really matter, Kriti, if we do see maybe a lack of stimulus coming through. John Louis, thank you very much indeed. This is where the manufacturing data is going to go. If the China economic story continues to weaken, it's hard to see how the German manufacturing story is going to pick up.
There is, and you mentioned kind of the ripple effects into the regional economies. If we just talk about that for a second, Damien Sassower, who does our EM coverage for Bloomberg Intelligence, often points out there is a trade-off, ironically I'm saying that, between the Korean won, the Japanese yen, and the Chinese yuan for a kind of what currency impact can you have on the actual trade that goes into the likes of Germany, the United States, and other parts of the world as well. And I think that's going to be a crucial one to watch. And to your point, how that does show up in Europe.
It already is. Look at what's happening this morning.
Yeah.
We've ignored China. It felt like for quite some time. You've seen it to a certain extent being priced into some of the luxury names. You've seen it in the manufacturing data out of Germany. This morning is just a case in point once again. The mining stocks are down. You're seeing weakness in the luxury names. How much longer? Is there an expectation built into some of these stocks that maybe China picks back up again?
Yeah.
Is that present? Do we still need to take that out of some of the names in Europe, or is China weakness already fully priced and there's only upside from here? I don't know. I don't know how much residual has the recovery already been priced in. If not, we're okay, because it doesn't look like it's coming. So I think there's potential volatility for European stocks still out of that China story. Anyway, we'll come back to that a little bit later. We're going to be talking about German politics next. This is part and parcel of that same narrative, what is happening with the Ukraine story as well. We've seen the regional elections this weekend. We'll talk more about it next. This is Bloomberg.
The question of where is this continent going to, where is Germany going to, is the question that is raised. And especially in East Germany, the problem for my party, the Greens, and Social Democrats being in this government is that the changes that are necessary economically, environmentally, society-wise, are those who work very slowly and are very differentiated. If you look back at the Weimar times, so just switch back like some 90 years or 100 years here in Berlin, this was the same development. The center was really shrinking a lot, and then how do you find a solution?
Otto Frick, a member of the Bundestag and budget policy spokesman for the Free Democratic Party, speaking to this program on Friday ahead of those regional elections. And of course, we have since gotten the results. Chancellor Olaf Scholz's ruling coalition has been punished in 2 regional elections in eastern Germany. The picture looks equally dire for another ballot in about 3 weeks' time. Let's get an update out of Berlin. Joining us this morning, Bloomberg's Oliver Crook, of course, monitoring the story for us. Ollie, how much of what we saw over the weekend is representative of the entire country of Germany?
Yeah, so Kriti, this is an important distinction to make because these parts of Eastern Germany that were formerly under the GDR, under sort of a communist regime, they tend to be much more in favor of extreme political parties, both on the right, both on the left. That doesn't detract from the fact, however, that this is a significant election in Thuringia, particularly because it's the first time the AfD has won a seat, has won a majority. It's not the majority of the vote, but it is the biggest party right now in that region, with about 32% of the vote, followed by the CDU. And it's significant because it's also the first time that a far-right party has won such an election since the Second World War. And when we talk about what the AfD is, it really is very different things in certain different chapters, but the ones that were on the ballot this Sunday in Saxony and Thuringia have been called and have been designated by the German intelligence services as extremist political parties. You have the leader in Thuringia who has been speaking this year and has been fined twice for using Nazi slogans. So this is the kind of thing where in this region, though it is, again, a limited perspective, when you look at the national polling, the CDU is way ahead, but the AfD is number 2 nationally as well. So it's a very significant development. And for many Germans who remember this past of extreme politics, intensely concerning, which is why you have seen so much protest in both directions leading into these elections, and you're going to see more of it.
Ollie, note from Deutsche Bank just dropping into my inbox. Weak election results likely to put further strains on the federal government coalition, but unlikely to trigger early elections. And if we talk about those federal elections which are going to take place next year, Sunday's regional election results are not a preview of the federal election which is going to take place next year. Based on current polls, the Conservative CDU, CSU likely to win the next general election. Talk to me about the implications of this for the whole of Germany. Talk to us about whether or not the firewall is going to hold and whether the AfD can be held at bay. How is German politics going to be shaken up by this, and how realistic a prospect is it that we get early elections?
So listen, there are a couple of things that we need to untangle here. I think for early elections, it's fairly reasonably unlikely right now. I mean, it's not the sort of situation where, and none of the members, by the way, of the coalition government have any interest in pulling out of the government, because the FDP, for example, over this weekend, they dropped out of both of the parliaments. They got less than 5%, so they're not even in the parliament anymore. The Greens dropped out of one. Every party did single digits, and frankly, nationally, it's not looking very good. So going back to the polls would not help them at all. Where things get interesting, Guy, is in the coalition building, and some major questions there. The first question is, will anyone ever work with the AfD? We have on the record from a number of parties, most of the parties, that they would not work with the AfD. That is sort of something that they've been talking about for a long time. But there has been hesitation at the local level, even with some CDU candidates. So it's something that you certainly need to watch. Then the other wild card is this new left party, Sarah Wagenknecht, that has not been around since, only been around since January, has got about 12 to 13% of the vote, is doing very well nationally. The question is, how will she fit into the certain coalition buildings? So all of these things are conversations that we're going to see going forward and are really important from the national level. We should also say that after the Brandenburg election on September 22nd, we will also start to get an idea of the candidates that the CDU is going to put forward. And on the subject of candidate, guys, I think the big question is, with the SPD doing so poorly on the national level in Germany, is Olaf Scholz really the right candidate to put forward at the next election?
Ollie, lots of open questions still to be decided. German politics certainly going to get more interesting as we head towards that federal election. Oliver Crook, thank you very much, out of Berlin. In France, President Emmanuel Macron is set to hold talks with senior political figures as he prepares to name a new prime minister. He is going to meet the former socialist prime minister, Bernard Cazeneuve. We're also understanding that we are going to see discussions with Xavier Bertrand. We're going to see discussions with former presidents as well. How close are we to a new prime minister being named? Caroline Conan joins us out of Paris. What are we looking at today, Caroline?
it seems like we are quite close to getting a name for a new prime minister, at least before Wednesday. That's what the Élysée Palace is saying at the moment. And as you mentioned, Emmanuel Macron is meeting today with two very key figures, one from the center left, Bernard Cazeneuve, who actually decided to split from the far left quite early on, even before the snap elections back in 2022 during the last presidential election. So clearly a center-left figure, and another center-right personality, Xavier Bertrand, who clashes a lot with Marine Le Pen in his region in the north of France, where he's president of the region. So quite two interesting figures. He's also meeting Emmanuel Macron with seeking advice from two former presidents from both sides of the political spectrum today. He's meeting first with François Hollande, a former socialist president, later this morning, and then with Nicolas Sarkozy, who actually disagrees with the option of Bernard Cazeneuve as a solution to this chaos that we've seen for the last 2 months. So if it ends up being Bernard Cazeneuve, what do we know about him? We know he was first European minister, then budget minister, then interior minister under François Hollande. He was, for example, interior minister during the terrorist attacks of 2015, so quite present in the media at that time. And then he was prime minister towards the end of François Hollande's legislature, just before Emmanuel Macron was elected in the first place. So we'll see if we see some white smoke later today at the Élysée. Otherwise, it's probably going to be hopefully by tonight or tomorrow, but before Wednesday.
White smoke at the Élysée. I love that, Caroline. Walk us through, though, just how much pushback some of these could get. You kind of walked us through the timeline there. They're also kind of staring at a looming budget deadline with the EU. Just how quickly and how speedily can these next 48 hours go? And then the budget negotiations off of that.
That's right. So clearly there is huge divisions in the left wing between those who want to split from the far left, which includes Bernard Cazeneuve, and those who actually don't want to break anything of the new Popular Front and want to implement the full program. Clearly, if it is Bernard Cazeneuve, it's not going to be the full program of the new Popular Front. The question is, what kind of costly measures is he going to keep in the next budget, which he has to present over the next few weeks? The deadline is October 1st. The current caretaker finance ministry, led by Bruno Le Maire, has already prepared a draft budget with an overall envelope of 492 billion euros, which is the same budget as the previous year. So clearly not including any major reforms, any major savings or new spending. So what kind of measures could Bernard Cazeneuve or a center-left keep in this new budget? That's a big question. He's going to name probably the details of his government, the ministers, the finance minister, 2 to 3 days after we know the final name of this prime minister. The good news is that according to Banque de France, the growth for France in the third quarter should be actually better than the 2 previous quarters due to the positive impact of the Olympic Games.
Caroline Conan, we thank you so much. She was there mentioning kind of the fracturing of the left. There's plenty of fracturing on the right as well, something we're going to be keeping a very, very close eye on. Again, we thank you for that analysis this morning. Let's go from France over to Israel, where, of course, we're watching the largest labor group poised for a nationwide strike today. It's the strongest push yet to force Prime Minister Benjamin Netanyahu's government into a ceasefire deal in Gaza. This comes after large protests over the weekend following the discovery of the bodies of 6 hostages in a tunnel in the Gaza Strip. Let's bring in Bloomberg's Israel Bureau Chief Ethan Bronner into the program this morning. Ethan, a pleasure to have you as we dissect kind of the situation. How extensive is this strike? Put this into context for us.
The strike started a couple of hours ago. It is seems to be largely holding 80 to 90%, I would say, obeisance of it. Lots and lots of shops are closed. Buses are not functioning. The airport has had a 2-ish hour delay in takeoffs. We'll see if that's extended. So post office is closed, civil servants at home, schools reduced. It's definitely having an impact.
Will it have an impact on the government? Will it change policy?
That's the good question. That's the most important question. It's completely unclear, honestly. The government's argument has been that the only way to get what it needs against Hamas is through force, and that the government's not to be blamed for the killing of these hostages, but Hamas is. And indeed, the bodies were found with bullet holes in them. They had been killed shortly before Israeli troops found them, a day or two apparently. So it's not very clear. I mean, that's certainly not what Prime Minister Netanyahu is saying. He's not saying we're going to change our policy. It doesn't seem extremely likely to me that there'll be a big change, no.
But that almost puts it puts the ceasefire proposal that the United States has been pushing for, as well as other kind of negotiators as well, into further peril. Where does those negotiations go next? What are the sticking points? What information can you give us there?
The sticking points have essentially been the same from the beginning, which is that the goal of Israel is to destroy Hamas, and the goal of Hamas is to survive. Hamas took hostages in order to get its own guys out and force Israel out of the Gaza Strip, and Israel has gone to war to destroy Hamas. And at the moment, I don't see any way to square that circle. What they came up with, what President Biden came up with several months ago and talked about, was having it in stages, so that the first stage of 6 weeks would not promise that there'd be a full end to the war. That would allow Israel to sort of stop its activity, get some hostages out, and then negotiate. But so far, Hamas has been unwilling to move forward without a promise that the 6 weeks would be extended to forever. And Israel has been unwilling to go forward with a promise that it would. So at the moment, the two sides are irreconcilable, it seems to me.
Ethan, thank you for the update. We greatly appreciate it. Ethan Bronner joining us out of Tel Aviv. Coming up, we're going to take a look at the UK private equity sector's trade body's argument that the government is about to make a massive mistake if it's going to raise capital gains tax in the UK. We'll discuss that next. This is Bloomberg.
Welcome back to the opening trade. We're about 46 minutes, we'll call it, into today's trading session. So you're seeing a little bit of red on the screen across the European stock market. This is, remember, a light liquidity, light volume environment. A couple of movers that are driving the story. Luxury is a big part of that conversation. You're seeing that China data read through, really weighing on the French market, but then weighing on the broader stock 600 as well. Then you marry it with the other pieces of the micro, which brings us some of the breaking data we're getting across the terminal right now. Italy's August manufacturing PMIs rising. 49.4 is the reading there. 47.4 was the reading in July. Look, it's coming in higher, but still a contraction when you look at some of the data.
It's a diffusion index,
right.
so it's basically still signaling contraction. Yes, it's a little bit better, but that's just a rate of change issue. So things aren't looking particularly good from the manufacturing side in Italy, which is unsurprising. I have the North heavily tied into obviously what happens in Germany. The German data aren't good. This fits the narrative.
It does fit the narrative. It also, I think, at some point, when we look at the deceleration of this, affect where some of the fiscal spending actually goes. It's something that Giorgia Meloni, the Prime Minister, has really wanted to kind of funnel, of course, into the industrial sector. No surprise there, and getting a little bit of a wrist slapping from some of her coalition in terms of meeting those budget deadlines.
Well, the finance minister is telling her she has to abide by the commitments that have been made to the EU.
Yeah.
Do the Italians take the commitments they've made to the EU seriously? Does anybody take the commitments they've made to the EU budgetary rules seriously? I don't know. There are plenty of governments around Europe that aren't taking them very seriously at the moment.
Fair enough. I'm fascinated to watch this entire thing take shape. But a big part of that budget conversation isn't just one that's happening in Europe. It's one that's happening in the UK as well, in terms of how you kind of feed that bottom line. The big part of that is taxation in various parts of the industry, which takes us nicely to the private equity space, which is saying it will support some of the government's proposed plan to remove a tax break. Let's get more into the details of the story. Our UK finance reporter Jenny Serrain joins us now. Jenny, walk us through this.
Yes.
I don't even know how to get into it.
So for the past few months, under Prime Minister Keir Starmer, Chancellor Rachel Reeves, we've been hearing more and more about the Labour government's plans to potentially roll back some of the tax breaks that the private equity industry has long enjoyed. And so I think one of the big, I don't know if I would call it a boogeyman, but one of the big things that they're very afraid of is the idea that the government will end the tax break that folks have long enjoyed on carried interest. And so this is a really key reason that folks think London has become, this amazing financial center, really a beacon in private equity markets. And so they're worried that with the potential rollback of this tax break that, folks will flee to places like Milan and other parts across Europe, which are really trying to lure folks away. So I think it's been this long discussion. We spent the month of August, hopefully getting responses from the industry and other folks that are particularly interested. And now we've started to see some of those responses.
August is always a great time to hold a consultation period. Exactly. Does tell you something maybe about the way that Labour is approaching this. Let's talk about kind of how this could work. The argument goes that if you invest, co-invest, you will get a better TGT reaction from the governments. Is that the middle ground here? Could that work?
So what we started to see over the weekend in terms of some of the responses that the industry put forward was they said that could work with some important qualifications. So definitely the industry does not want to see this applied retroactively. So they're like, if this, is a form of retroactive taxation, that could really, mark the end of London as an attractive financial center. And so as long as it works on a go-forward basis, they seem to be somewhat okay with the proposed rule from the Labour government.
Yeah, this is going to be one of the areas that, well, it does seem to be the big focus coming up in terms of the budget, but you do wonder how much money it could actually raise. Anyway, Jenny, nice to see you. Thank you very much indeed for stopping by to see us. Jenny Serrain on the CGT story and the private equity story here out of the UK. Let's stay in the UK for the next story. Shares in Rightmove, very much having a good day. This on news that Rupert Murdoch's REA Group, or REA Group, I'm not entirely sure which way you are meant to pronounce that, is considering a takeover offer valued at $5.8 billion for the UK property portal. Rightmove, if it were to go along with this, would be part of a global digital real estate company. Bloomberg's Moana Coriam joins us now to discuss. Is this a surprise? I haven't heard much talk of this deal coming through, and you're certainly seeing a very violent reaction in terms of the share price this morning.
Well, yes. I mean, the question is really going to be how much they are prepared to pay and how much would be required in order to satisfy shareholders. We've got an improving outlook for the UK property market, which Rightmove has 80% of. So it's not a surprise in terms of it is very attractive for a company looking to expand its global footprint, particularly as the UK market is so dominated by Rightmove. But how much they're going to pay is obviously going to be in question, but the shares are responding to the expectation that they are going to be paying a certain amount over the current share price.
So Moana, just for those who aren't maybe familiar with the way both of these companies actually operate, is this a bid or is this a play on interest rates in the UK? Is this a play on the UK consumer? Is this a play on the technology that enables those purchases? Walk us again through the attractive piece of it.
Well, like I said, it does have 80% of the UK property market. It's really the sort of go-to for people who are looking. And we are seeing, as you said, interest rates coming down. We've had one cut. There's another one expected in November from the Bank of England, although, different factors can change things. But that will lower mortgage rates for prospective buyers. It will also just loosen up a bit of the property market, which people have been waiting to sell as well. So I think that is seen to be something that is expected to pick up. And UK property has always been attractive to international investors as well.
Well, does Rightmove have any sort of proprietary technology that Murdoch wants? Is this about UK access, or is it about what the company itself specifically offers in terms of the product that it has and it offers?
I think it's probably a bit of both there because, it has got that monopoly in some ways over the market here. I don't think that there's a particular technology focus. It is more about expansion. But as I said, I think that the question really would be how much money they actually have to raise in order to do it. You've also got a bit of competition coming over currently. A US company has bought one of its rivals, and there's a bit of debate about how significant that is. But there is increased competition there. So it's certainly a great market to be looking to get into.
All right, Rowena Coniam bringing us the story on Rightmove. Those shares higher by almost 21% in today's trade, paring back some of that initial gain, but of course coming off of that potential deal news. We thank you so much for putting that into some context. Some breaking headlines crossing the Bloomberg terminal here. More economic data, this time coming out of France. Those manufacturing PMIs, again, in that contraction territory, a 43.9 reading versus a 42.1 estimate. And of course, still a pullback from what we saw last month as well. So again, the story is quite simple. We aren't necessarily seeing strength in Europe, and France continues to weaken.
So that number's slightly better. So that's a final number. So we can get the German final number in just a moment as well. So, but still really terrible. These are very, very weak numbers coming out. Well, we'll see the German number in just a moment.
We definitely will. In terms of market reaction, though, again, something that it doesn't feel like the markets are that reactive to. Let's walk you through to what they might be going out throughout the rest of the week, because I have plenty of economic data going as well, mostly going into the lead up to Friday's payrolls number as well. Tuesday, got the ISM data out of the States. Wednesday, focus right back here in Europe. Euro area PMIs, UK PMIs, Swiss inflation data is the one I've got my eye on, alongside Thursday's Japanese wage data. Really interesting dynamic there in terms of the FX trade around the havens, but really, again, all leading up to the jobs report on Friday.
You got claims this week, you got ADP this week, you got JOLTS this week, you got the payroll number on Friday. We're going to get a pretty strong tell on what is happening with the labour market, and I think we lost count of how many times Powell in his Jackson Hole speech talked about it.
Yeah,
it was north of 20, I think, and it is clearly the significant shift that we've been watching away from inflation to focusing on what is happening with the labour market. But was the last payroll number affected by the hurricanes? Are we going to see a bounce back this time? If we do get a bounce back this time, does it in any way change the belief that we're going to see a 25 basis point cut from the Fed in September? That seems to be firmly nailed on at this point.
It does, but they've kind of backed themselves into a corner, haven't they? In that if you start to see a really strong payrolls number, to your point, that could actually question a little bit of that credibility story.
Absolutely. But is the longer term, are these sort of two blips that even themselves, maybe we need to take an average and maybe figure it out that way. Final German manufacturing data. These are final numbers out of France and Germany. You know the way it works. We get obviously only one data set out of some of the peripheral economies. Core Europe, German manufacturing PMI, the final number 42.4. 42.4. These are super weak numbers coming out of Germany. The manufacturing sector much more dominant than it is in places like France, so therefore much more important. And it comes back to what we started the show talking about, which is, again, super weak Chinese data, which continues to have a fairly substantial gravitational effect on what we're seeing in Germany right now. And now you've got as well the stronger euro to think about. Does that change the calculus in any way into how competitive those businesses are going to be?
Yeah, it's really fascinating. I'm still waiting, again, for the read-through into some of these spreads. I thought today's conversation with some of our guests is really fascinating, coming off of kind of the election story and the political story in France and Germany, that we're actually got to keep an eye on the German bonds, the premiums baked into that, as opposed to whether France kind of narrows.
Well, I think that may be a story for further out as we head towards the federal elections, but these elections will have an impact on those federal elections as we work our way towards them. It does seem as if politics has been the story of the morning there, doesn't it? Is that going to set the tone for the whole of September? We will find out. The conversation continues next. Francie Lacroix is back. The Pulse is coming up next from Curry and me. Good morning.